Alrighty, let's go through some trade examples and I'm going to separate these out in terms of phases. So let's look at phase A first. So of course, phase A is when we are trading pro swing and pro internal, right? We have that full alignment. So on this diagram, this would be a phase A trade and this would be a phase A trade if we are taking shorts, because after this bearish IBOS, the internal structure is bearish. The swing structure is obviously bearish. So we have full alignment. These are the types of high probable trades you want to trade with phase A. So here's an example where we have bearish 4-hour swing structure. Okay, we've got that 4-hour break of the low. Price then traded up and it did break the 4-hour swing high. However, we can see that it was just a wick break. It failed to close above the high with a candle body close. Therefore, it is not a bullish break of structure. And then since then, you can see that price has just started to make its way down. So ultimately, this is still a weak 4-hour swing low because it's failed to do its job. It's failed to cause a candle body break of the high. So ultimately now we can look for price to target this low. Okay, so with the 4-hour, we have that bearish bias with some nice equal lows building to target. If we now jump down to the M15, so this is going to be our medium time frame. So this is our main time frame for building our directional bias for the session and then identifying the medium time frame POI in which we're going to trade that directional bias. Okay, medium time frame ideas, medium time frame POIs, lower time frame execution. So as we can see here as well, the M15 swing structure is aligned bearish with the 4-hour swing structure as we've got that last break of structure here to the downside. Now, price did pull up to this M15 POI here. This was around the Asian session time, see 2:30 GMT, and then had a bit of a corrective move down and an M15 chock. But we can see that, like, you know, the internal structure is still clearly bullish. So when you get your desk, say, around Frankfurt Open before the London session, yes, we've had a bearish chock, but you can see price action is kind of quite corrective. And there isn't any real super clear and mitigated POI at this point when price is pulling back. It's all kind of being mitigated. So it's not too surprising then, with all of that buy side liquidity building up, that we see this impulsive move to the upside, okay? Giving us another bullish internal break of structure of this high. Okay, so hopefully you can see now that if we were to take a short from this POI, it would be pro M15 swing, but it would be counter M15 internal. So that's actually phase B. I know this lesson's gonna be on phase A, but this would be phase B. Okay, now if you're ever going to trade phase B, the best time to do it is kind of like this, whereby you are entering on the unmitigated extreme POI. Why? Because this is the area in which we expect the swing pullback to end. Okay, so if you're going to trade short here, which is against the bullish internal trend, we want to do it when we're expecting the internal structure to reverse. And we expect it to reverse when we think the overall swing pullback is finished. And because if we look left, this is literally the last unmitigated M15 supply zone within this leg, within this range. That's why it makes sense if you want to trade phase B, these are the sorts of times to do it, right? Because you're expecting the internal to reverse, but of course there's no guarantees. So if you are going to take a phase B short, ideally you can get in here before price pulls back down, you know, into like demand at a strong low, because then of course price could push higher. Okay. So that would be phase B. Now, technically, if you wanted to trade this, right, before I even jump down to the lower time frame, you can see there's clear M15 lid here. So we know obviously it's going to be valid on the M5 as well. And this could be a potential entry for you, right? There is lower time frame lid to the left. It's visible in the M15, which makes it, you know, higher probability. It's more significant if you can see it on a higher time frame. Time is power. We have the POI mitigation. We have the liquidation of the lid to the left. Okay, so technically this could be an entry, right? And you could size it up like that. Now, these ones are kind of tricky to, to categorize with probabilities. I would say it's kind of on the lower end of medium probability for me. One, because it's phase B is trickier, like I keep saying, because you're trading against the internal trend. But two, this is quite a big swing range. Okay, this is quite far away to the left. So as I was saying before in the theory lesson, we don't want to be using lid all the way here to the left and then entering short on a liquidation of this lid. We want it to be very, very near, ideally. Like if we were getting short here, you see how lid is like right beside it. So it's like a tiny little internal range. These are my favorite ways to use LC1. using structure all the way to the left like this and then trying to short it here, right, when we liquidate that lid into here, much, much, much trickier to do. So, I haven't even really looked out to take these sorts of trades really in the back test of, to be honest. I'm focusing more on the immediate price action, but I did just want to go over that in case anyone was looking at this. Perhaps that's something you want to test and you wanted to implement, but my recommendation would be that you focus on what I'm describing, which is the more immediate price action to the right, unless the swing range is a lot tighter. So this is kind of where I would classify this as old price action to the left. Obviously, there's a bit of discretion with that. So it's a nice trade if you took this one, if you wanted to enter on this, but it's the type of trade I would personally say stay away from. At least until you gain more experience. It's not the type of trade I'm personally going to be looking at least at the time of recording. It would be too far away from me, okay? But this ends up being a winning trade. I won't draw it out for the interest of time. Now, what I'm going to show you is phase A, where things become a lot higher probability, because if we're just a little bit patient, because at this moment, right, what could happen is this is a strong internal low, right? So although we've had a mitigation of the extreme level of supply, and we know this is a decent area in which the swing pullback can finish, and we can get that next move, we obviously don't have confirmation of that until we get the bearish eyeboss. Because there is every possibility that this could hold and we could push up higher, right? The market can do whatever it wants. So trying to short against this is possible. It makes sense to do it here because it's the last unmitigated level, as I keep saying. But it's only when we get this that now you have, okay, a lot more confluence going for shorts, right? So we get that bearish eyeboss. So now both the swing and internal are aligned bearish. Happy days for shorts. A few other nice little pieces of confluence. Like I said, obviously we sweep some lid here to the left into that extreme POI mitigation. We also got with this M15 shock here, use this here, that then turns this bullish eyeboss also into a strong liquidation. Okay, so yes, it is a valid bullish eyeboss, but it can also be a strong liquidation at the same time, right? This is a high that broke some structure, price then comes up, liquidates the liquidity behind that high, it's the Asian session high as well, and then we get the bearish eyeboss. Okay, so let me keep it nice and simple for you. The 4-hour structure is bearish, the M15 swing structure is bearish. We pull back up to pretty much the highest probable POI in this swing range that needs to hold if we are to remain bearish. We've liquidated some lid to the left. We've had a strong liquidation here with the immediate price action of the Asian session high, right? This is a high that broke a low. Prices come up and liquidated those orders. Nice big V-shaped reaction, showing that it's likely the big guys are using the buy side liquidity behind that high in order to fill their short positions. Okay. And then in the most simple and powerful confluence we have is we have a bearish internal break of structure. So even if you don't really fully get all of the liquidations and everything and whatever, very simply, our internal structure has now shifted bearish. This is our strong high. We now expect these bearish internal ranges to hold until the weak low goes, right? It's pretty much the first thing you learn in a technical analysis module. Okay, so we know our directional bias. We want to get short. So then step 2 is identifying your medium time frame POI in order to play that directional idea. So our directional idea is bearish. Let's look for a supply zone. Well, we've got the extreme supply zone here. But what can we see? It's pretty much kind of already had that clear mitigation, right? Where we came down, pulled back into it, and we came down. So I would view that as basically mitigated, and then you can move that along to the next clear level, right? This is another buy to sell candle that gets engulfed. So this for me would be the clear POI in which I'd be looking to short from. So now what we can do is we can look for either LC2A, where we drop down to our lower time frame, right? Let's get rid of this phase B LC2A trade there. Sorry, LC1 trade. But here, this is the trade idea we're now doing, right? Phase A shorts. We are aligned with, like I keep saying, M15 swing and internal are bearish. So now we can look for an entry here. So the first thing I'm always going to be thinking about, ideally, is the fake break liquidation that forms in the pullback. So for LC2A, what do I want to see? I want to see price come back in. I want to see a high that breaks a low, right? Then look for the liquidation of that high. That's your liquidation. And then we enter on this candle here. That is LC2A. You should be very, very comfortable with it. If you're not, do not start trading LC1 because LC1 is a lot more aggressive. Okay. So now we start to get the pullback, and what we'll be looking for LC2A, like it said, right, is that for that to form here. Okay. But we can also use LC1. Now, there isn't really any clear structure in this leg. It's a little bit more of a subtle one, but this inside bar is a valid fractal high. Okay. It's a structural high, because this is a candle that fails to break the previous candle's low. So it's a bit of a weird one, but if you guys are comfortable with the fractal structure rules we use, you will know that that is a fractal high at this point. Okay, obviously we get a bullish change of character down here, but this counts as a fractal high, as it is an inside bar. Okay, so we could be waiting for the fake break liquidation. This high has not broken the low all the way down here, so there's nothing going on. So what you can then draw on is your liquidity point here. Now, before we even get the liquidation, you want to be very clear in your mind before any of this happens. Is like, okay, is this valid lid? Well, yes, it's a structural high in the leg to the left, right? That created the POI. Okay, fine. But is this an environment in which I should be thinking about LC1? Well, step one is it's phase A. So we know this is a high probability phase. Phase A and phase C are our favorite. So that's a good thing. But two, look how tight this internal range is. You see how it's like this? It's a tiny little small range, and we're going to be using some lid in here. Whereas, when I was talking about this phase B trade here at the start, that's the range you're then talking about, and you're talking about lid all the way to the left. So do you see the difference in size here? You've got this massive range there, where you're trying to time a liquidation of that with this. Okay, fine. I'm not saying you should never do it, but I'm just saying that's a lot harder than this tight little range here, this immediate POI, and you're looking for some lid right within here. It's a lot easier to time this. And this really is what I'm trying to push you guys towards, to focus on only thinking about using the entry model when you see this sort of price action. Okay, this is how I'm personally approaching things, which is what I tried to make really, really clear when we went through this theory lesson. So this is basically this trade here. I didn't even mean to do this, but this is basically this diagram is a very, very good representation of this live price action back in 16th of Feb 2023 on EU, right? Pull back into the extreme, liquidation of clear medium time frame lid to the left. We also had a strong liquidation in the more recent price action here. Remember? There you go. There's a chock, liquidation of the high into the extreme, liquidation of the lid. But more importantly, the really good piece of confluence, if we keep it simple, is we got that bearish IBOS. This then becomes our strong internal range, and we're just looking to play the continuation of this range. Okay, this is when I see the setup. It doesn't happen every week, doesn't necessarily even happen every month, but this is for me go time to be as aggressive as I can and look to get involved for that movement. Okay, but again, the key thing is it's a tight range. So yeah, we can look for the liquidation of that high. There we go. Alert goes off. There's your liquidation, and then it's the same sort of method we use for LC2A. Stop order, sell stop order below the low, and then whatever pip buffer you want to use. Now, on this candle, 2 pip buffer almost gets me at the high of this. So you might just want to, use a little bit more, half a pip or so, especially when we're entering right at the top of the swing range, right? And you've got a big risk reward towards that low. So just extending your stop loss by a few pips isn't going to make a big difference, especially if you're just going for that 3.3 target. Just give yourself a little bit more stop loss protection. You can use a little bit of common sense in those scenarios. We push up higher, so we'd cancel our order, readjust it to this candle when it closes. 2 pip would give us the 4.4, and that just puts it behind. So there you go. Makes sense to leave it there. Do we get tagged in? They're in, right? Now we're in the trade. So set and forget. You do nothing until this plays out. We push up a little bit higher. Nothing to do here. Okay. And if I just play this forward a bit, it does chop around, and there we go. Okay. So yeah, with the LC2A entry model, there was no entry because we get a pullback. This high doesn't break a low to the left. Okay, fine. So that's not a strong liquidation because it's a weak high. We then push up. We pull back and we push up. This high doesn't break any structure to the left, right? So this is not a strong liquidation. It's a weak high. And then we just move away. Okay, so there's no strong liquidation in here in the pullback that we could have used for LC2A, because once we get the highest point, it never gets broken, right? We get the M5 chock here. So then you'd be looking for a liquidation of that high. You ignore all of this. And actually, if we've got a liquidation of that high, then the POI itself would have failed anyway. So then the trade idea would be over. So there was no way to capitalize on this position from this POI in this example, unless you use the LC1 entry model, okay? Now, that said, you don't have to, it's unrealistic to be able to catch at every single move anyway. So if this didn't give a trade setup, it doesn't give a trade setup. It's not the end of the world, okay? You can't be in every single move, and you don't need to be to make insanely profitable returns over the course of a year. But you see how now this is a very complementary bonus entry model to have to add in to trading it alongside LC2A, okay? But again, very, very specific scenarios. Ideally, you're doing it in these high probable scenarios where we have, this is a great example of so much confirmation from the medium time frame that we're now ready to target this low. Pull back to the extreme, liquidation of lid to the left, strong liquidation in the more immediate price action, giving us that strong liquidation on the M15, Asia equal highs. We get the bearish IBOS. Shorts are now phase A. Okay, really small range. There's literally only one POI we can look to trade from. Nice lid within the POI, right? We're not using lid really, really far away. Like these textbook entries are what looks like this. Okay, this is what you want to be leaning towards when you're thinking about LC1. Because like I said, technically, this was an LC1 trade that was phase B, right? Liquidation of lid to the left into our POI. We're looking at M5, right? I'm not telling you what you can and can't trade. This is a valid LC1 trade. It's just you may find these a lot harder to have good results with when you're using, lid far away. And that's kind of why I tried to try and think, how can I help you guys to kind of have a bit of a rule to define whether the range is too large. And this is what I said. When you look at the lower time frame, can you see the lower time frame lid to the left and the LC1 entry at the same time without zooming out? So what does that actually mean? What it means, when you're looking at this entry here, right, I can't see the lid to the left. I have to zoom all the way out. Now, okay, you don't have to zoom super, super far out, but it's very, very different when I'm looking at this and I'm looking at this entry here, right? This entry, can I see the lid? No. Okay. What about when I'm looking at this entry? Well, yeah, it's right there, right in front of my face. And that's kind of what I mean as a general rule of thumb about what can help you to know, am I forcing things here with LC1 or not? This is a perfect example. Okay? So I'll leave that there. We'll go through a few more examples in phase A, but yeah, hopefully that all makes sense.